All right, well, I'd like to thank everybody for meeting us in Atlanta, Georgia today, which is the location of Coca-Cola's headquarters. I'd like to talk a little bit today about our joint venture that we're going to be getting involved in, which is going to make possible a new breakfast product called Breakfestables. Since we've been, communicating with each other over the phone and via email, and we're meeting each other face to face for the first time, I think it'd be great, if we just briefly introduced ourselves, who we work for, and our names.
Well, with that being said, I'm Mitch Blyumin. I represent C&H, Case New Holland, and I'd also like to take a quick moment to apologize for my shenanigans at that Thanksgiving party. I truly had no idea how much they spiked that fruit punch. But moving on. Yeah.
I'm Joanna Castro from Kellogg's Corporation.
And I'm Stroner from Nestle.
And as you probably already know, my name is Sublewski, and I'm representing the Coca-Cola Company. So let's talk about a little bit about Breakfestables and what it's comprised of. Essentially, we're going to be taking one of Coca-Cola's products, the Odwalla line, and using that as the juice basis for essentially a cereal that is going to be made up of Kellogg's, one of the Kellogg's cereals, and topped off by Nestle chocolate chips.
Tom, let me stop you right there for a second, because I don't know about you guys, but you mentioning all those ingredients has just made me realize how famished I am. So I'd like to take a quick moment and divert everyone's attention to the luxury pizza I had catered in on behalf of C&H today. It's the least that we can do. I'm glad everyone got the memo about bringing your own beverage today. As you know, it's been quite the hectic year.
A lot of cutbacks.
Yeah, a lot of cutbacks. So I'm sorry, we can only go so far, but
Spare no expense.
Well, pizza's always been in the family, but
Well, thank you. Everyone should have read the capital budgeting report before this meeting, outlining all the facts and figures behind the Breakfestables product line. But I just wanted to go everything one more time.
Well, C&H is going to be providing $15 million worth of machinery at our cost.
We chose C&H over any other competitors due to the fact that they have great industrial grade agricultural machines.
Well, thank you, Joanne. Yes, we do build our machinery to the strictest of tolerances and the highest of standards. And my only regret is that we couldn't provide more to this project.
Mitch, it would be great if C&H could make agglomerators, because, Nestle really could use those to make the chocolate chips and other ingredients used to complete the Breakfestables product line. Tom, what's Coca-Cola's motive in the Breakfestables project?
Yeah, Tom, what's your motive?
Well, see, Coca-Cola Company, we see a great opportunity in Breakfestables. The Odwalla seems like the obvious solution. We're in stride with our consumer base, who seem to be looking for a healthy, convenient breakfast solution these days.
Alright guys, let's talk figures.
So guys, what's our initial outlay going to look like?
Well, as I've already mentioned, there's going to be $15 million on C&H's end to spend for that machinery.
About $2 million for Kellogg's to order a new agglomerator.
Yeah, Nestle's also going to be purchasing a new agglomerator, but for about $1.5 million.
And in order to purchase new tractor and trailer combinations to transport the product, Coca-Cola is going to be incurring a $1.5 million price tag.
So what are we looking at as a total, guys?
I think that'll bring our cash flows, bring it to about $20 million, and our cash flows should cover it in about 8 years.
That's matches with my numbers. How about you, Tom?
Yeah, that looks about right.
All
All right, so is that year 1 to 3? What are we looking at? Maybe 1 to 1.5 million a year in revenues, and
Based on the numbers I have, that looks about right.
yeah, and then years 4 to 8, maybe 3 to 4 million once word gets out about the product and it becomes more popular.
And then, so after 8 years, we're expecting to see a positive NPV, aren't we, guys?
Yes?
Yeah, definitely. And after attending a conference in which Terry Gerber spoke from Unilever, it seems like NPV is the most common tool to use to evaluate the capital budgeting projects. So I don't think IRR is really a concern of ours.
Oh, that's great.
Where did we, did we reduce any costs over here, guys? I'm just curious, what inputs could have been reduced, or if they've already been reduced.
Well, yeah, actually, CNH did reduce some of our costs because, they're providing all the machinery at their own cost, so,
So
thank you,
thank
Mitch.
you
That
very much.
Oh,
helps us out a lot.
Of course, it's all about our dedication, you know, you know our company policy, which is to better the earth, you know, that we live on. We have 6 billion stakeholders. I was curious if everyone got their costs to the bare minimum that they could, because I can tell you on my end at CNH, we actually manufacture the machines to the least expensive method possible. So, curious how you guys do.
Well, that's why I chose you, Mitch, because of your reduced costs and the ability that your competitors were giving us a really high profit margin and your ability to commitment of the social improvement of the environment.
Alright, so, and how's our financing looking, everyone? I mean, it looks like between equity and debt, I think debt was a better choice for us because interest rates right now in the US are really low. And, we spread out the risk and diversify it among all of our companies instead of just one, so I think it's, debt is a pretty good option for us.
Yeah, I see that as a great option. You know, in this report, I see a cost of capital of 5 to 6%, and I was just wondering if you could explain some of the factors. How do you came to that number?
Well, I can tell you guys after looking at this, you know, obviously we're initially releasing breakfastables in our home market of the United States. And this is going to be, of course, advantageous to us because we already have a well-established infrastructure here in the U.S. So that, of course, lowers it. You know, what else, guys?
Even though this big recession that we were going through, we are starting to see big demographic changes that are beginning to rebound to boost our profits.
Yeah, we also feel that due to changing lifestyle trends, the American consumer is looking for a healthier, more mobile option for breakfast, which Breakfastables meets.
And lastly, we all know that due to various campaign contributions, we can count on the support of our constituents in Congress. And I don't think we have to worry about a coup anytime soon.
Alright,
Look.
so, guys, what do you think? Here's the Breakfastables product prepared by IDEO Corporation of California, one of our best design firms in the business. So, looks great.
Oh, wow, it's just
Wow, it's
gorgeous.
very
Look
professional.
at that. Look at that. Fast. Unbelievable.
How did
It's
they
great, yeah.
get such high resolution on the image?
Geniuses.
The colors are great,
Printers
yeah.
are great.
Great. Okay, and then what do you say, guys? Let's wrap up by watching our TV ad that we're gonna show to the public.
Oh wow, we already got that knocked out?
It is.
Yeah.
This is just
This
gonna be
is great.
solid, guys.
Are you tired of the same old pancakes, waffles, and crepes in the morning for breakfast? Do you like Lunchables but wish they had them for breakfast? Try Breakfastables, the healthy breakfast on the go. It's comprised of Kellogg's, Odwalla juice, and topped with Nestle chocolate chips. It's the healthy alternative.
So much flavor, it'll hit you in the face.